My boys won't hesitate to run up on your boy. 엉덩이 팡팡팡 남자들은 탐탐탐 내 등장은 짠짠짠 삐자 팡팡팡 디스코 팡팡팡 Hello.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Izzati binti Alwi, and for this slide, I will explain about the introduction. Okay, of course, we choose the Saudi Arabia. Saudi Arabia is officially the Kingdom of Saudi Arabia. It's a country on the Arabian Peninsula in Western Asia. It has land area of about 2.1 kilometers, making it the third largest country entirely in Asia, also the second largest in the Arab world, and also the largest in the Western Asia. Okay, the Saudi Riyal has been a fixed rate to US dollars since June 1986. Foreign exchange earnings come predominantly from all exports, which are deposited with the Saudi Arabian Monetary Agency, SAMA. In turn, SAMA credit the government's account with the equivalent Riyal. Therefore, SAMA is responsible for meeting the foreign exchange needs of the public and private sector by selling dollar against reals to the domestic banks. SAMA last intervened in the foreign exchange market in 1998. This took place in the forward market because speculations tend to be in the forward market since banks can treat it as an off-balance sheet item. Speculation against the real occurred in the 1990s. At times when the oil market was weak and foreign exchange reserves were falling. More recently, in 2007, there was an episode of speculation in favor of the Riyal due to Saudi Arabia's strong balance of payments and fiscal position, a weaker dollar, and a rising domestic inflation. SAMA also handled this more recent episode by reiterating its long-standing position to uphold the exchange rate agreement without actual intervention.
Assalamualaikum warahmatullahi wabarakatuh, and hi. So I will continue to explain about theoretical literature. Firstly, according to Abel Aziz 2008, found that oil prices have significant effect on the real exchange rate and stock market in Egypt, Oman, and also Saudi Arabia. And according to Dawson 2006, that investigated the impact of oil price on the Dominican Republic's real effective exchange rate using oil price, consumer price index, trade balance, gross domestic product, which is GDP, and real interest rate. Okay, next, changes in interest rate have an impact of the exchange rate of a currency that in return affects export, import, and foreign direct investment. Country with higher interest rate leads to currency appreciation and vice versa, according to Summerson and Nordos 2005. Last but not least, according to Cordet et al. 2007, a change in the dollar exchange rate affects the prices received by oil producers and consumers, excluding the United States, which in turn leads to a change in the supply and demand for this commodity. As for the demand channel, it is worth reminding that the price of an oil barrel is expressed in US dollar and the transactions are made in this currency. Thus, oil demand in importing countries depends on the price of a barrel or is converted into domestic currency, and this can be lead to the price fluctuates due to changes in the exchange rate. That's all for the theoretical literature. Okay, so this is factors that affecting exchange rate of Saudi Arabia. Firstly, gross domestic product, which is GDP, oil price, inflation, and also interest rate. Okay, next in this slide, this is the exchange rate of Saudi Arabia. Firstly, as we can see, for the year 1977 until 1980, the exchange rate Saudi Arabia Rial against USD rapidly decreased from Saudi Arabia Rial 3.525 to Saudi Arabia 3.327. Why? Because of a recession and global financial crisis that happened in Saudi Arabia. For the year of 1980 until 1987, the exchange rate increasing quite higher, as we can see that, which is from Saudi Arabia Riyal 3.327 until Saudi Arabia 3.7500. Saudi Arabia was a key player in coordinating the successful campaign in 1999 of OPEC. For the year of 1987 until 2020, the Saudi Riyal exchange rate in the spot market remained constantly at Saudi Arabia Riyal 3.7500 per USD from 1987 to 2020 as a consequence of SAMA strategies aimed at preserving the Saudi Riyal stability to suit the Saudi economy's interests. This is the exchange rate of Saudi Arabia.
Okay, for the next slide, for empirical evidence, we have descriptive analysis and also correlation. Okay, we proceed to the descriptive statistic. Okay, on this statistic, we have minimum, maximum, mean, and standard deviation. Okay, for minimum is we collect the data from data value that occurs least often, and also for the maximum, the data value that occurs most often. It could be none, one, or more than one value in the data set. Okay, for mean is the average of the data set. It is calculated by dividing the sum of all the observations by the number of data values. Okay, for standard deviation is the square root of the variance. Okay, on this statistic, this data has included for ER, inflation, interest rate, oil price, and GDP. So for this data, we have 24 years as a data value. Okay, next we will proceed to the correlation. Okay, this data is based on oil price statistic. Okay, correlation is a statistics that measure the degree of which two variables move in relation to each other. It also related to coefficient. Correlations can also measure the movement of stock with that of a benchmark index. Okay, on this slide we have Pearson correlation and also SIGs. Also, we can see that for Pearson correlation for ER, inflation, oil price, GDP, and interest rate is slightly more than 6.2 for ER, inflation, oil price, GDP, and also interest rate. Okay, for the next slide, we will proceed to the multiple regressions. We have model summary, ANOVA, and coefficient.
For the regression analysis, I will explain about the model summary. As we can see, this is the model summary that the table provided R-squared and adjusted R-squared values. The R-squared values of 0.637 indicates that 63.7% of the exchange rate is explained by oil price, gross domestic product, which is GDP, interest rate, and last but not least is about inflation. Next, the value of adjusted R-squared is 0.561, which is that 56.1%. That variation in exchange rate slightly to be explained by the predators, which is oil price, gross domestic product, GDP, interest rates, and inflation.
Alright, for the coefficients, the table shows that this statistic value indicates that inflations, oil price, and interest rates all have a positive significant impact on the exchange rate. As a result, the null hypothesis is rejected and the alternative hypothesis is accepted, while gross domestic product, that is GDP, has a negligible impact on the exchange rate. The null hypothesis is accepted. Next is the ANOVA. According to the table, we can see that the F-test has a p-value of 0.00, which is less than the level of significance of 0.05. Because the level of significance is lower, the null hypothesis is rejected. This means that inflation, oil price, GDP, and interest rates are statistically significant variables in explaining fluctuation in the Saudi Arabia exchange rate. In conclusion, these studies examine inflation's oil price, GDP, that is gross domestic product, and interest rates as components of Saudi Arabia's currency, the Saudi Riyal, against the US dollar in the long run. It is supported by empirical evidence from multiple regressions and correlation analysis. Multiple regression analysis revealed that inflation, oil price, and interest rate have a positive significant impact on Saudi Arabia's exchange rates, whereas gross domestic product, that is GDP, has an insignificant impact on the exchange rate. Furthermore, the correlation analysis revealed that inflation, oil price, and gross domestic product (GDP) have a negative relationship with the Saudi Arabian exchange rate, while the interest rate have a positive relationship with the Saudi Arabian exchange rate.